rare earth supply and some 80% for the US specifically, and this leaves US and allies cornered if China decides to pull the plug. Rare earths are essential, absolutely essential for data centers, battery, defense systems, aerospace systems, consumer electronics, medical imaging and equipment, satellites, basically the majority of electronic technology. And this makes rare earths a matter of national security. There are no shortage of freaky looking graphics that depict how scary our dependence on China for this is. And unless this is countered, well, long term, the US will be at a significant disadvantage. The Trump admin has tried to counter this by taking stakes, financing, and or otherwise backing domestic rare earth suppliers. Now, popular rare earth stocks with government backing and or suspected future government backing include MP Materials, MP, Lithium Americas, LAC, US Rare Earths, USAR, American Battery Technology, ABAT, and many, many more. But these are all in a pushback from all-time highs. Why? China recently restricted rare earth exports, which caused massive spikes in these stocks. Then China and the US de-escalated, and of course, most recently on November 1st, the US and China made that deal that suspended these restrictions, and that was for the timeline of 1 year. That said, the long-term thesis here is very much unchanged. Long-term, the thesis is unchanged. Government has taken significant effort to support domestic companies and has made reshoring away from China a key component of its goals. If China can suspend rare earths on a whim, the U.S. does not have national security in the segment, and that's why I believe that the administration's push to support domestic rare earths is only beginning. If China can play around with our national security, that reaffirms the goal of really booming out the domestic industry here. So overall, I would say, look, the counter-China trade is alive and well, and rare earths is going to remain a key battlefield for the coming years. So speaking of the counter-China trade, let's talk nuclear. Few people are realizing that energy production and the ability to produce energy cheap is one of the core fronts of the overall AI arms race. And with electricity costs skyrocketing, this is going to become a bigger and a bigger issue. And one of the main ways to solve this is with nuclear energy. You look at the number of nuclear reactors under construction right now, China is far ahead of everyone else. 29 nuclear reactors. And so the Trump admin has been pouring focus into countering this. Quote, Trump administration backs plan for new nuclear plants. And we've been talking about this for a while and named a few ideas in the space. Now, one of those core ideas in this segment was the SPAC called HOND. We explained that they were going to be merging with terrestrial energy, and it was one of the main publicly traded ways to get in on the new DOE Department of Energy program. And my prediction was that you'd see an anticipatory run before.
Okay. Comments, questions on YouTube. Otherwise, start a breakdown here. There is one stock that is about to skyrocket. That company is Apple. Apple recently had positive earnings and sales. They sold off slightly with the market. As I record this video, the market is down almost as much as it was 2 weeks ago on that Trump and Xi dispute. Now could be the opportunity to buy. There is a pause around earnings when Apple cannot buy back their shares. This is a law. Now could be a time to buy Apple given how much it's held up even as the market is selling off. This is not financial advice, but I hope it helps.
Sam and Putnam.
So everyone can see the market selling off right here. You can see Bitcoin. Bitcoin's below 100K. Okay. Any comments, questions, drop those on YouTube. Otherwise, we'll go here. I think there's no news either. Here it is. This is the sell-off. Pretty gnarly. All the way back to levels from that rare earth scare. Wow. Again, comments, questions on YouTube. Otherwise, we'll jump in here. There is one stock that is about to skyrocket. The tech giant everyone gave up on is now crushing Google and Meta. The stock is Apple. AAPL. They announced a $100 billion buyback. Their earnings reaction was positive. The only reason they've really sold off, it appears, is that the market as a whole is selling off. And right now, as I record this video, the market is all the way down within the last 2 hours to levels from 2 weeks ago. Meta is down several days in a row after recognizing a $15 billion tax. And Google is selling off even as it is rumored that ChatGPT is not affecting their business. That may or may not be true, but so far, that is what they're maintaining. This is not financial advice. Let's jump into a little breakdown.
This is Sam Putnam.
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 So this is the market right now. This is the most we've seen it sell off since October 10th, which was the Trump-Xi rare earth tension. And it's been choppy ever since September, which was incredible. We've gone sideways, okay? So no one can say what's going to happen, but what we can say is that right now, it's choppier than normal. Even looking back into August, July, June, May. Of course, April was extreme, but it certainly looks like a tough time. And Bitcoin is now underneath $100,000 for the first time since late June. So with all this being the backdrop, Apple is holding up. They did sell off after their initial move up on earnings, but they have serious relative strength today, even as the market is in, I won't say it's in free fall, but it certainly looks pretty ugly. Looking at the NASDAQ, looking at the QQQ, of course, those are selling off just like SPY. And now the question is, what stocks are still holding up? And those that are holding up have significant buying. So Apple's buyback is a likely candidate for the reason that stock is holding up. So we'll see, but it's most often the case that when a stock holds up, it's because someone or some group is buying a lot of shares. And when the market does turn up, whether it finds support, whether it goes sideways, the stocks that are holding up as it falls are likely to start to go up because now everyone's buying the market as well as the people buying that stock itself. So there's the QQQ. It's looks like this in the NASDAQ futures. Of course, looking pretty ugly. So all we really have to focus on is individual stocks, and I think it has to be Apple. Let's take a look at their recent earnings and make sure we see something that looks encouraging, because in the Mag 7 as a whole, there really hasn't been a lot that's encouraging. This is the Meta sell-off. Amazon is the lone success story. And then if we look at Google, it's definitely selling off here with the SPY. And I don't know if NVIDIA is going to hold this level either. So here's recent sales for Apple. They did have this $1 billion in tariff-related costs, but for them, that's basically a drop in the market. Revenue was up 10% year over year, and their earnings per share was up as well. So everything pretty much was solid. They did have guidance that was somewhat favorable, not huge, but this is a massive company. And then if we just kind of look at how they talked about their products, well, they said that sales of iPhones were better than expected. So, you know what? All things considered, that's pretty good. They've famously been talked about as a company that just sits on cash and doesn't innovate, doesn't even acquire other companies. They're largely considered to be the loser so far in the AI race. And now this is kind of a reversal when Meta was poaching researchers from ChatGPT. Meta's down significantly right now, and Apple is basically hanging around. They did buy back $20 billion in shares, and that's in the last quarter, up to $100 billion in the last year. And they're going to repeat that with this new authorization. So it's not 100% known that that's what's going on right now, but if we look at the chart, it certainly looks like it. And this is a really unique situation. It's not often you get to see in real time that basically the market's selling off and certain stocks are holding. There are other ones that are, of course, small to mid caps that are holding. Okay. But as far as the large, the Mag 7, Meta, Microsoft, Apple, Amazon, Google, Tesla as well selling off. So someone is buying Apple, and I know, you know, everyone knows the market can't go down forever. It's down now 1, 2, 3, 4, 5, 6 days in a row. So no one's here to pick a bottom, but as far as probability, it's more likely than not gonna have a green day in the next couple of days. I don't think that is a controversial statement. And I think Apple is well positioned to turn up when that happens. It's through earnings and it's showing relative strength. So that's the idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that for YouTube subscribers once a month. And if you want to get the best idea of the day, head over to stockscommunity.com. You can join for $25. So if you think that's worth it, give it a shot.
This is Sam Putnam.
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 All right, I kind of just want to watch the market right now rather than listen to anyone, but looks like there's a little pause in the selling at least.
For the merger, and then to take profit period right before and after the merger, as has been the case with SPACs historically. And then long term, you'd see an adjustment to its true value, which I believe is going to be much higher. Now, anyways, they merged and it's now IMSR on the NASDAQ. The overall titles haven't changed yet. It's probably going to take a couple market days for them to change. But if you look at the overall chart, that's basically what happened. What we predicted is what happened. It was trading at just under $14 when we called out Hunt, and then it ran to $27, and then now it's back down to $17 post merger. So where will it bottom for long term growth? Well, I'd argue around 14 to 15 bucks a share based on previous patterns before a longer term uptrend that takes it back into the 20s and then the 30s in the bull case for 2026. If you're in the Discord, we're going to continue to update you on this, and there's going to be new calls alerted probably sometime this week once the stock steadies out a bit. Okay, next let's move on to our new picks for November 2025. So we got to start with number 3, Fermi Inc., FRMI. So what is Fermi? Well, Fermi is essentially an AI-focused infrastructure real estate trust with a bold plan to build massive data center campuses powered by on-site energy generation, natural gas, solar, batteries, and most importantly, next-gen nuclear. The company's powered shell lease model lets hyperscaler tenants plug directly into dedicated power capacity, a crucial edge as AI workloads push global energy demand through the roof, as we've been talking about. It's a high-potential business. I mean, you got a promising model, you got massive market tailwinds, but there's also a lot of execution, financing, and regulatory hurdles in this space. So why does this stock stand out to me? Well, for starters, it has a connection to the president. Rick Perry is co-founder and director of FRMI, and if you recall, Rick Perry was the energy secretary in Trump's first term. He's also a former governor of Texas, and he has a very famous name in Republican politics, and he's using this experience and I think his name to build out a colossal nuclear campus in Texas. Now, as the former U.S. Secretary of Energy and a former governor of Texas, Perry is likely quite familiar with all of the layers of red tape and likely has a ton of relationships that can help expedite the regulatory process here, which is the main hassle. And moreover, get this, guess who they are naming their massive Texas campus after? Well, none other than President Trump. Cringy? Sure, but that's the way this game works. A lot of companies played the same game during the Biden administration, trying to push the ESG policies and some other policies. A lot of people think that corporations are naturally one party or the other, but really the corporation's main political party is the political party of money, which means they're going to follow wherever the money is. And it looks to me like this company's been built from the ground up with the understanding of how to play the game to get the massive moonshot government deals. If you're reading the tea leaves, I mean, there's a lot of nuclear plays out there that could have got government funding, but quite frankly, I mean, they're kind of run by people that are still playing by the old books. They're trying to advertise themselves as climate change plays when they really should be advertising themselves as energy security, national security plays. Again, they do the same thing, but how you advertise makes your politics very, very well known, and that's why you're seeing a lot of these companies start pivoting very, very aggressively to catering to the Trump administration. And also, this type of company specifically looks like it's being built from the ground up, catering to the Trump administration and the national priorities of the Trump administration, which I think is going to help them a lot to build in this space the next few years. Okay, so what's the overall case for Fermi? The AI boom, as you know, it's not just about chips, it's about electricity and space. Every new LLM or training cluster needs megawatts of stable power, and Fermi is directly targeting that bottleneck. Its Texas campus aims to deliver up to 11 gigawatts of capacity long-term, enough to power some of the largest AI operations on Earth. It's got strategic leadership and Trump ties. Of course, like we've just said, co-founded by Rick Perry, former U.S. Energy Secretary under President Trump, a major credibility and access advantage for permits and partnerships exists. The planned Donald J. Trump generating plant isn't just a name, it's branding that, quite frankly, panders for political support and media visibility in a pro-energy, pro-infrastructure environment, specifically in regards to reshoring energy independence. It's got first mover scale and REIT structure. So Fermi is trying to do something no other REIT is doing, and that's vertically integrating real estate, power generation, and data center leasing into a single platform. The REIT structure could make it a future dividend powerhouse if projects reach cash flow status. Think digital infrastructure meets utility yield service. Institutional investors piled in at IPO around $21 per share, which is a strong vote of confidence for a pre-revenue company. And right now it's not trading much higher than that, which is great. And then there's also the clear macro relevance with the US and China tech rivalry and rare earth truce easing, temporarily at least. Domestic AI power capacity is going to become a national priority, and Fermi's US-based energy independent design aligns perfectly with America First energy policy and the push to onshore critical infrastructure. Anyways, this is what we sent out to Discord members.
Okay. Let's talk about oil. Okay. Again, if you're on YouTube, I can see those comments. Okay. Do a little breakdown on Dino. This is literally a gas station company. Oops, false alarm there. This one stock can change early buyers' lives. This is not financial advice, but my research suggests people who buy as much as possible before November 7th would do well. The company is Dino, Dino, HF Sinclair, the same Sinclair that operates the gas stations. They have over 1,000 of those independent gas stations. They also have 25% of their revenue from Shell. Their recent Q3 earnings beat, and this sector, oil and gas, was arguably the only sector that did well in 2022, the bear market of 2022. I'm not calling it top. I'm not using the word bubble. I do know that these oil and gas stocks are strong right now, even as the market is selling off right now. Let's jump into a little breakdown.
This is Sam Putnam.
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 So this is the Q3 earnings for Sinclair. Significantly beat consensus. Revenue slightly up in the mid single digit billions. And they improved their refining margins. And they also used all of their refineries. So, looks like they actually used more than they had somehow. Maybe they have a partner for that. But here's the deal. This is a positive reaction, large, more importantly, unexpected, like they said, higher than consensus. And as a result, this is the move we have. Okay, initially, not so good, right? Looking at the chart, sold off a little, but why is this a good earnings reaction? Well, if we zoom out, we see that this company is actually at the same price it was a week ago. And if we look at the SPY, that is not the case at all. The SPY is down, it's got to be 4 or 5% at this point from all-time highs. So oil and gas is definitely a safe haven. And this company in particular, with that unexpected earnings beat, is a safe place to buy at a time when it's not clear that buying the market itself is a good idea. Even Chevron, which has been going sideways while the market went up, is still holding after these recent earnings. So these Q3 earnings were good for oil companies. Oil itself hasn't done anything to earth-shattering, but when you see a company have strength like this, when all the big companies, Meta being the most egregious given that recognition of that tax hit, but even big companies like Nvidia, AMD, pretty much any Fortune 500 company is or has been selling off. It's actually interesting. Walmart's holding right now, even if the market sells off. Could be a buying opportunity there. I think that Dino is one of the best opportunities right now, given they're also at this base headed back to September. So there's a clear level right there that everyone's going to be looking at. This margin improvement is definitely meaningful. This administration's obviously friendly to oil and gas, not just because they're Republicans, but also because the GDP right now is wholly made up of AI growth, whether that's through data centers or the Mag 7. So permitting is definitely easier right now. And if we look at these other companies that are very similar, Philips is another consumer name. I think all of these, for the most part, are holding up. VOO, even MPC, interestingly, even as it sold off, it did have some buying into the close. So even those that missed earnings seem to be going all right. And that's definitely an indication of a strong sector. So continue to take a look at these, at least the ones that load on Thinkorswim without taking like 15 seconds to load, because this software is run by Schwab now, who's basically run it into the ground. But anyway, this is the company. That's the opportunity to buy it. That's the recent earnings. And as for essentially what else they've got going on, there is a producer's tax credit for renewables that they're going to get a little lift from. And then these are their sort of guidance for barrels per day. So if they don't hit that, that's a red flag. And then they're also in a bit of a pause for maintenance. So, you know, I'd love to give you a stock idea to just hold for the next year or 5 years, but in all honesty, it's just easier to say, hey, for the next month or so, this stock looks like it's going to perform well. It is a dividend paying stock. And the guidance is strong. So everything seems good. Now, is that usually the case? No. There was actually a company just last week, LAES, a quantum security company. Can you think of a better, can you visualize a better looking opportunity than this? Probably not, right? But what happened? Well, it sold off. And the market definitely helped with that. But in general, this was not even exactly moving with the market. So definitely got to have caution. But this strength is very much notable. And I can't really find a company with more strength right now. And I don't think that these risks are that notable, at least for the next month, when I think this idea is valid. So that's the ticker. And if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that to subscribers once a month. And if you want to hop in the Discord for tomorrow morning, head over to stockscommunity.com. You can join for $25. We do a daily drop in there to talk about the market. I'll see you in the next one.
This is Sam Putnam.
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 Okay. 670 still. That's the magic number. PARR holding up for sure. Another oil and gas stock. And see what else Charlie has to say.
On Fermi this past Thursday, quote, Fermi signed 2 additional nuclear agreements tied to its planned Amarillo, Texas data center campus, aiming to start production of long lead equipment for 4 Westinghouse AP1000 reactors. And then we sent this out today. FRMI is a unique setup to the data center / nuclear / alt space with a close connection to the president through his former energy secretary, Rick Perry. As we pointed out here Thursday, this is going to continue to be a relevant stock with upside potential for the coming quarters and years. Okay, next, number 2, TSMC, Taiwan Semiconductor, trading as TSM. So TSMC is the world's largest chip foundry by revenue. Almost every big tech company is a client of Taiwan Semiconductor. If you're talking about Nvidia, AMD, Broadcom, Apple, you name it, it's a customer. Now, we have been calling this out since way lower prices, both on YouTube, but also many times in the Discord. It is also a core portfolio pick in the Discord if you're somebody who does look at our model portfolios. But I continue to believe that this is a buy and hold slowly over time type of pick. We love it long term, even though it's up at way over all-time highs, we love it. And quite frankly, the numbers back us up. The overall breakdown here is, yes, this is the world's largest chip foundry. The customers, as the customers scale, and these customers are scaling pretty rapidly if you look at recent earnings reports and the earnings coming this week. Well, as those companies scale, it's inevitable that you see TSMC scale as well because, again, they're all contracting together. And then there's the AI boom fuel. Every AI chip from NVIDIA's H100 to Apple's M series depends on TSMC's advanced nodes. They're the invisible backbone of the AI arms race and set to skyrocket. Number 3, record growth. Latest earnings showed revenue up over 40% year over year and profits hitting all-time highs as AI and high-performance computing demand continues to explode. And I believe that CapEx is going to explode even more into 2026, which means that TSMC should explode too. Global expansion, building new fabs in Arizona, Japan, and Germany reduces geopolitical risks and secures billions in subsidies from friendly governments. And I think that this new China trade deal is actually going to help de-risk a lot of the fear away from Taiwan and an impending invasion. And then you have the massive competitive moat, decades of R&D, process leadership at 3 nanometer and below, and trust from top clients make it nearly impossible for rivals to catch up in this space. Number 6, valuation. It's still reasonable. Despite its dominance, TSMC trades at a lower multiple than many US peers like Nvidia or AMD, giving long-term investors room for upside in the overall AI arms race supply chain. And then quite frankly, the overall bull case, this is a picks and shovels play on the entire tech revolution as AI, EVs, and data centers scale worldwide. TSMC is quietly profiting behind the scenes, and this is something that you got to keep in mind, and this is why we have been very, very big believers in this stock for a long time and continue to be. Now, finally, number 1, AMAT stock. So I believe that AMAT is very quickly heading for a breakout of its all-time highs and will build substantially above that. And look, it's failed many times before, but right now you have some of the strongest growth we've seen and some of the strongest momentum, and that's backed by, again, the numbers behind the scene. Applied Materials is one of the most critical companies behind the chip manufacturing process itself. While TSMC helps make chips, AMAT actually builds the tools that make TSMC itself possible. Look, we've called this stock out here before on this channel a number of times. We even broke down how members of Congress were buying shares in the stock back in 2024, and we alerted call options in the Discord as late as this summer. But I continue to believe that AMAT is a buy. Why? The numbers support it, the demand supports it, and again, all of its partners are reporting huge revenue boosts, which suggests to me that this will also be reporting huge boosts. AMAT is essentially the company that builds the machines that build the chips, making it a very, very critical level of the supply chain here. Now, it's the backbone of semiconductor manufacturing. AMAT provides the advanced equipment and materials that companies like TSMC, Samsung, and Intel must use to produce chips. Without AMAT's machines, there's no chip supply. It's as simple as that. They're riding the AI and foundry expansion boom. Every new data center GPU, every 3 nanometer fab, every AI wafer build out directly boosts AMAT's order book. If you look at their numbers, if you look at their backlog, if you look at their order book overall, this company is an absolute monster. They profit as everyone else scales. And as the other companies are reporting their scaling, you're seeing this one scale as well. They've got explosive demand visibility. Orders and backlog remain near record highs as foundries invest hundreds of billions of dollars globally under the US, Japan, and EU chip incentive programs. Government backing is a big thing here. Diversified dominance. AMAT isn't just about logic chips. It also leads in memory, display, and packaging equipment, giving it a balanced exposure across every major chip cycle. It's got strong financial momentum.
Okay. That sounds good. I think oil and gas is still the place to be. Okay. So I think they have a agreement with Mitsubishi for that renewables facility. Small refinery exemptions. Okay. Regulatory relief. Okay, so basically Trump likes them. How's that? U.S. Renewable Fuel Standard. Bump up volume for biomass-based diesel. Okay, I don't know what's going on really, but it's fine. The stock looks like it could go up. So it is going up, actually. And there was recent earnings as well, for sure, that were solid. So, yeah. They repurchased 15 million of their stock. For some reason, it's not telling us what guidance was. That is a massive earnings per share beat, though. Oh my God. Okay. Trump's energy stocks will make you rich. That sounds like hyperbole, but this stock will surprise everyone. The ticker is PARR. They recently had Q3 earnings come in at an earnings per share about 300 to 400% higher than expected. And the stock is moving like it. It's holding up. It's actually significantly up today, even as the market is selling off a lot. This company has an agreement with Mitsubishi to have a renewable fuels $100 million facility on their property. They also have a seat at the table as a small refiner, and that comes with some exemptions through the Environmental Protection Agency. So they are getting some benefits from this administration. Ticker's PARR. Let's jump into a little breakdown. It's not financial advice.
This is Sam Putnam.
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 So here's the move. Here's the earnings. You can see how big that beat is. And look at the strength right here. Sure, it did sell off initially, but there's a ton of buying activity, clearly, given where it closed up here. Surprisingly, there's actually not a ton of volume, but the price is up there anyway. So what it must mean is not a lot of people are selling. So there's obviously more buyers than sellers because it went up, but it seems like there might not be a ton of buyers yet, and people definitely don't want to sell after such an awesome earnings. So this is the market. Slight bounce. It looks like maybe we're finding a little bit of a bottom in after hours, but this is significant. I mean, a big drop from 680 to 670 in the past 24 hours. So to see these oil and gas stocks hold up, Chevron probably holding up the least, but still just where it announced earnings at. And these are the big ones. ExxonMobil, same deal, holding up. And I'm talking about the big ones because the big ones compose the SPY. And when we look at other massive companies, well, SMCI just reported earnings after hours, and they definitely were not helped by the market dropping. So that's pretty rough. And then as far as other big companies that just happen to, be up and be of a large market cap, they're selling off, right? Because people are selling the market. So there's Intel and PARR. Sure. Is it up a lot from its lows down here in May? It is, but it's taken its sweet time to get there. It did have a pullback in July, only to get bought back up. And now we have a little sideways action with a breakout opportunity. So it certainly looks pretty favorable. Now, this is the results, and this is that small refinery exemption impact where $200 million come from that. So to me, that sounds like 2/3 of this adjusted net income. I don't know why it's adjusted or what is it adjusted for, what reason, but it's pretty similar to the basic net income anyway, came from this exemption. So that's getting recognized now, even though that's referring to the last 4 years, I believe. So as always with these stock ideas, it would be great to say hold this stock for the next year, but as a little tiny ship, you benefit from these little earnings moves where they recognize $200 million of revenue in this particular quarter. And it's not a little earnings move when the company is over $1 billion market cap. So it's 90% institutional owned, and the revenue is over $2 billion. So you have to say that there's plenty of liquidity for almost anyone to get into this. 300 million pretty repeatedly. If you take 1% of that as a general rule, that's a $4 million position can be dropped into this stock with the click of a button, not even over the course of a day or an hour. And it's not going to budget much, if at all. And I mean much, like a few cents it could budget, right? But probably not more than 15 cents. Maybe some type of execution block trading expert can chime in here, but super liquid, super solid jump, and also more profitable. And yeah, so this is a one-time regulatory gain, but we get to benefit from that. This sort of margin improvement is more indicative of their strong business, but either way, it all sort of combines, along with the share repurchase, to make this a really good time to buy. Revenue decline is kind of amazing given how good this reaction is. And the guidance, which we'll see if they give any, I think the guidance is good. Let's see, let's ask ChatGPT, is the guidance good for PAR? But this is the small refinery exemption. Basically, it has something to do with biomass, biofuels. So this is one of the companies that told Trump their business will continue to suffer if these renewable fuel standard volumes are increased. So basically, this is like environmentalists' worst nightmare, which is companies lobbying for less renewables, while also at the same time, grandstanding or whatever the word is for renewables by partnering with massive corporations like Mitsubishi on $100 million facilities that are renewable based. So they're kind of talking both sides of the aisle right now. And honestly, with the reaction to the earnings, it seems like it's working for them. So that's the stock. And it looks pretty unbeatable. Once again, this is the market right now, even as the stock goes up a lot. So if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. That course is posted. I post it to subscribers once a month. And then if you want to hop in the Discord for $25, we do a daily drop-in to talk about the market. So there's something for everyone there. I'll see you in the next one.
This is Sam Putnam.
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 All right, so shall we look at Japan? What do you think, Raphael? What do you think, Mpine? Is Japan the reason for this sell-off in the SPY? That's the Nikkei index, right? What about the China index? Not so bad. I don't know, you tell me. All right, well, flying blind with this computer right now. It's I can see your comments though. There we go. Maybe we should be able to bring up Finder here, or whatever it's called on Windows, File Explorer. Here we go. All right. Let's see. It's like everything moves like molasses when you're on Windows. Oh boy. I shouldn't have just named that in all caps. That was dumb. We'll give you guys this pie to look at there. That's a little more American for you. Okay. Oh dear. There you go.
Free cash flow near record levels, margins expanding, and steady buybacks. Management keeps capital discipline while riding secular tailwinds, which we love to see, a masterclass in business management. You got valuation that's still appealing. I know it's at all-time highs, but it's trading well below NVIDIA-style multiples despite being an arms dealer to the entire semiconductor industry. And so the upside here, look, it remains very, very compelling. And then overall, the bull case, look, the global AI and chip fabrication race is accelerating. It's not decelerating. AMAT is sitting at the center. And this is a picks and shovels play on the world's most capital-intensive boom. And I think it's going to continue to age very, very well. Anyways, folks, that caps off today's video. Have a great rest of your day. Make sure to take advantage of our Halloween sale on Zip Trader Discord with that first link down below. We're going to be posting a ton of prep alerts and overall forecast this week, and you're not going to want to miss it. It's going to be a lot of stuff that we're going to be reflecting on later on in the YouTube videos, and you're going to be like, damn it, I wish I had seen that preparation.
We got more content, don't worry.
And having the right information and the right research and the alerts when timely is kind of like the main game of the stock market, right? So anyways, link down below, expires tomorrow night, that 25% off sale. Anyways, that caps off today's video. Have a great rest of your day. We'll see you next time.
Ta-da. Okay, here we go.
What's up, YouTube? It's time to go hunting. You guys already know when there's blood in the streets, it's time to eat. I got a jam-packed video for you guys, so please keep it locked. Please make sure you like, subscribe. Help this video get at least 1,000 likes. So without further ado, let's go ahead and dive into it. Now, guys, we got the sell-off. We got the pullback. We got the dip that we've been waiting for. And so when it comes to investing and building wealth in the stock market, you want to buy on pullbacks. You want to buy on dips. You want to buy when stocks are at lower prices, okay? And so today is a great opportunity to go shopping. When there's blood in the streets, it's time to eat. And guys, we are going to go ahead and dive into our bag on today and do just what we do, okay? So listen, if you guys are ready to make some money, if you guys are ready to change your life, please follow along, okay? Out the gate, guys, I gotta make sure I go to number one. Everybody take a look at this. Meta came back down to the $600 range, okay? And so look, guys, target on this one, 800, 1,000. Mark these down so that you know once this sell-off is over with and the rebound occurs, where we are headed next, okay? And so what I want you to do, okay, do me a favor. I know you guys can swing this. Check this out. You want to go to trade. We want you in your bag, all right? So let me know, do you guys have $50? Okay, let me know if you at least have. Look at that. Look at the price. No matter of fact, we're gonna do this. We're gonna keep this at where it was at. But what we want to do is 627. Let's put that back how they had it. Okay, boom.
Okay, let's jump into a breakdown here on Hertz. This company has gone on a crazy short squeeze in the past. This was in April, from 4 to 9. And then if we really zoom out, 2021 they did go to from 15 to 45. But more recently, yeah, This is in April, the move. I don't think they're connected to any major companies or investors, but never hurts to check for sure. Let's see. What do they got going on here? Oh, they have a partnership with Amazon. Okay. I don't know if that's going to do it. I think this is a shock. For sure. Let's see. Yeah. Let's see. $6 stock. $6.56 stock. Turn around. Okay. This stock will shock everyone. It is a big surprise. They have partnerships with Uber and Amazon. The earnings were expected to be a negative earnings per share, but it came out positive. They're actually positive currently. It's hard to say. The margins aren't great, but no one expected a positive earnings per share, and the stock price is extremely strong as a result. This company has gone on big runs in the past. In 2021, they went from 15 to 45. And right now, it looks like Hertz, ticker symbol HTZ, is about to go up yet again. This is not financial advice.
This is Sam Putnam.
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 So this is the improvement. Large losses to positive, whatever adjusted it is, EBITDA. So more of their cars are getting used. Less of them are basically, becoming unusable. And revenue did decline, but I guess it's a difficult environment for renting cars. Maybe travel is not super high right now. We can sort of look at cruise lines not doing well, actually. So, and airlines not doing as well as also. So that narrative checks out. If we look at Avis, it's not doing well. So, all right. So it all makes sense, I guess. Hertz, with this positive earnings per share, is expected to be negative. Big move up. And if you look in the past, the stock definitely has shown it can make big moves in short periods of time. This is the move I was talking about in 2021, but that was a euphoric time for all stocks for the most part. So, great opportunity given that the market is selling off right now. This is the Nikkei index. Japan, pretty ugly move down, similar to the move down on the Trump Xi talks 2 weeks ago. Since then, Trump and Xi made up in Korea, but still a lot of profit taking right now. So to find a stock that's holding up this well is pretty rare. There are some oil and gas stocks holding up as well. PARR is one of them. But this is pretty unusual. This is a turnaround story for Hertz. So that actually has been the narrative. It's kind of the meme stock of the year. So it is relevant. It's not entirely quantitative to talk about a turnaround story, but for such a small, low price ticker, it really plays a role. And if we look at the cash and the opportunity to sell shares into the market, Hertz definitely has both of them. They don't have much cash, and they do have the opportunity to sell shares in the market. So high offering ability. So, in the past, in September and then in June, they did raise about high hundreds of millions of dollars at $6 and then $9. So somewhere in here, that's a pretty bullish number to raise at $9, and then in June to raise at $6. That's reasonable. So these offerings are, near the price of the stock. This is actually pretty crazy. $9.24 on the 25th of September. Because the stock price was all the way looking at 2024. Still, the stock price did not get anywhere near $9, really. So very favorably priced offering. So investors definitely think that this company is worth more than it's currently worth. That's part of the turnaround story. This is how they can raise money at any point, right? They can sell it into the market. But this is the turnaround. They came out of Chapter 11, low debt, and we're trying to use all of the cars they have. And it sounds like this quarter they have achieved that. So they still have to work on, I guess, depreciation, using the cars for as long as their lifespan. So maybe they bought some new cars to make all that happen. And they have, like we just saw from that convertible note and just private placement. So when those notes, the debt is converted into shares. Those investors, those shares get created. Those investors can sell them into the market. I don't know exactly when, but that can be selling pressure. But so far, just we'll have to see up here around this $9.25 level that we just looked at if there's any selling pressure. So that would be the most important thing to think about. That's going to be an important number. But we're not even there yet. We're down here. I'm just saying the opportunity here is large. So this is the idea, Hertz. It's a turnaround story. And it looks amazing even as the market looks pretty rough. So if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that in the YouTube posts once a month. And if you want to do a daily drop-in on the market, head over to stockscommunity.com. You can ask me questions there. And it's $25. So if you think it's worth it, give it a shot. See you in the next one.
This is Sam Putnam.
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 All right. So back to Chris here.
What you want to do here is, I want you to see this, man. If you are able, everybody look at the amount. Let me know, do you have $50? Okay. Let me know, can you swing investing at least at the bare minimum? Now listen, guys, you can always do more. The goal is to
Cipher
show
looks
you
awesome.
that it don't take all that. The goal is to show you that it can be done, and you can then see like, oh man, I put 50 in this time, but had I put in more, I could have also made more. Let me know if that's understood, okay? That's meta. We dropping at least $50 in there, okay? Make sure you add these to your list, okay? Boom. Next, we have Netflix. Okay, I want this to be a no-brainer, guys. Now listen, this is going to split. Matter of fact, a 10-to-1 split is going to be on the horizon. So after this pullback, you have around, I'm going to say 10 or so days for the run up into the split to occur. Okay, so listen to this. Make a note of this. They want the price to be slightly higher, like 11, 12, or 1300. Write this down so that when they split, okay, they might want to split and make sure the stock is $500 or $600 or $650. Let me know if that makes sense. So if they get it up between 1,000, if they keep it 1,000 to 1,300, okay, they can ensure that on a 10-to-1 split that they'll be back in the what they deem a more affordable price range, a range that more people can buy, more people can trade. So know that for me, okay? They want to have the price at what they deem a desirable number and level when the split occurs. Typically running up into the split, you get a nice little run up, okay? This is Netflix. Do you got $50? If you got $50, do me a favor, go ahead and drop it in there. And listen, we go shopping around here, especially if you guys join the 100K challenge on Mondays and Fridays, okay? However, on a day like today, when the opportunities actually come, all right, if you don't do limit buy orders like I do, what you want to do is begin to put some buy orders in place, okay? So like today is a Tuesday. We're not necessarily going to be buying the way we would on a Monday or Friday, but we don't want to miss today. So you have your buy orders in place. So 1,000, you can get at this level right here, 1,092, 1,050, 950. Let me know if that's understood. These are some levels to put your limit buy order at. $50, okay? Don't go crazy for me. And then boom, allow this to take off and run to the next levels we got. Okay, what else Coach got for you? Everybody check this one out. They got absolutely busy on earnings. I love Palantir, guys. They ran all the way up to 214. Guess what that was? That was a window and a snapshot to where it's going next. So do me a favor, okay?
Palantir did have solid earnings, but sold off for sure. So Cipher somehow, put this over here. They posted a loss. Let's see. They got a $3 billion contract. Ten-year hosting agreement with FluidStack. That was a couple months ago. Let's just get rid of this. I think this might be related to NVIDIA, this company. Google LLC. Google will backstop $1 billion of warrants. Cipher is to several major companies. So they get 5% of Cipher. SoftBank has 50 million. Is NVIDIA related to Cipher? That's what we need to know. Could be. Google. Yeah, I don't know. All right, so Google is definitely the connection in SoftBank. And as far as the earnings, Let's see. There's the earnings. Somehow the earnings, oh yeah, they were expected to be negative, positive. All right, that's definitely a lot to work with. This one stock, oh, actually, let's check how much it costs. It's $22.66. Okay. This one stock has crazy potential. One $22.66 stock can change early buyers' lives. The ticker is CIFR. They have now a $3 billion revenue commitment from a high performance computing supplier. They also recently have Google as an investor, investing in 5 billion of their 5% of their company, in order to allow that $3 billion high performance computing deal to happen. So Google is backstopping it. Cipher has a solid earnings reaction, even as the market is selling off right now. This is a 5th down day in a row in the market. And with Cipher being strong now, there is definite reason to say buying as much as possible before November 15th is a good idea. This isn't financial advice, but it looks pretty solid. Let's jump into a little breakdown.
This is Sam Putnam.
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 So this is the chart. This is the buying. This is the earnings. And you can see that it was expected to be a loss. And it's a beat. So similar to Hertz, massive volume, earnings expected to be a loss. It was a beast. Cipher has that look to it. So even as the market sells off, even as the Japanese Nikkei sells off, Nike, someone's going to have to correct me in the comments with phonetics. The QQQ is selling off, obviously the NASDAQ, obviously the futures, obviously even small caps, IWM. So to see a company holding up despite all of this is good news. And then if we look at what actually happened, here's the 1.4 billion Google deal. So Cipher signed this 10-year deal. This is like a tenth of a gigawatt. It's pretty incredible. A tenth of a gigawatt is valued at 3 billion. So imagine, OpenAI is talking about 20 gigawatts needed of AI. So it's like whatever that is, 20 times 10 is like 200. It's like that's over $500 billion in AI hosting costs. So it makes sense why Sam Altman's talking about needing over $1 trillion. Google's gonna basically allow this lease obligation to happen. I don't get exactly how that works. I don't know if they pay the real estate owner or what, but they're the guarantor, whatever it is. They're getting warrants. and that makes them 5% owners of Cipher. So, yeah, they're going to offer debt to finance that center. So, I think this is all related. Google is basically paying for it or allowing this to happen. So, as always, the Mag 7 is basically leading everything else that happens downstream. And this is proposed, but the stock is certainly moving like this is going to happen. So, yeah, we'll see. As far as other investors, SoftBank is an investor as well. It says Amazon is boosting the stock. I don't know exactly what that refers to, but we don't want to get too in the weeds here. They already have Google and SoftBank backing them, $50 million pipe. So that's pretty awesome. And then the actual earnings is relevant as well. So if we take a look at that, 40 million is not a lot of money for sure, but it's a pretty small company, and yeah, it looks like Amazon did a similar deal as Google. We don't need a subscription to figure out that's basically what this says. They are pivoting from Bitcoin to hyperscaling, aka running GPU workloads, AI workloads, making LLMs work. And this is like the major moment to show that that's actually real. I mean, 40 million revenue is not a lot, but 3 billion of revenue through Fluid Stack through Google is a big deal. I don't know the Amazon number. I mean, I could certainly ask my friend here. What amount did Amazon pay Cipher? How are they connected, right? It's over a $5 billion market cap. So that's kind of like a random threshold I just sort of pulled out of my whatever. But there is a high institutional ownership. They don't need cash and they can raise money. So that pretty much means that this is actually going to happen. If they have over $1 billion of cash, this is not really accurate, right? 6 years. That's pretty sure they're going to spend all that cash pretty much in the next few years, I would expect. But I could be wrong. I don't know how long these data centers take to build or how much they actually end up sucking up in terms of money, but they're able to raise money. This is the $1 billion raise at $16 in September. I guess that's Google sometime in here. So that definitely helped this stock move, it looks like. And oh my God, so they do have a 15-year agreement with AWS also around the multi-billions. So this company definitely is connected to all the most important companies, SoftBank, Google, and Amazon. And I like the chart, and this earnings is good, and it's holding up when the market's going up. Anything could happen, but seems like a good idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe, and you'll see in the YouTube posts, I post that once a month. If you're a busy person and you want help, head over to stockscommunity.com. You can sign up for $25 to the Discord. This is the #1 Discord for busy investors. Check it out. You can watch the recordings. You don't have to be there for the Q&A or live streams that are only available to Discord members. So give it a shot if you want to improve your investing.
This is Sam Putnam.
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 All right, there's one more stock here, SEI, to sort of take a look at. So this is CIFR and then SEI.
Okay, one, do you got 50 bucks? I need you to drop 50. Pick one, guys. You ain't got to go for all of them. But my point is this. If you learn to find your horse, then, guys, you can ride that to whatever financial goal you have. All of these players that I'm presenting to you are going to get busy, okay? They're going to go higher in price. They're well-ran companies. They have good leadership. They have good CEOs. They have good people at the helm. What I need you to do is make sure we take advantage when we're supposed to. Don't try to buy this when it's 200, but you don't want to get it when it's 190 or lower, okay? 185. So imagine getting it at 185 and then boom, over the next 2 or 3 days you get the pop to 214. That's how I want you to be thinking, guys. We got to do the work now though, okay? That is Palantir, PLTR. What else Coach got for you? You know, I can't forget my big dog, NVIDIA. It's all the way closed at 198. It's all the way down to 195 now. This was just above 200 as well. Couple things for this one. One, they won't let AMD be ahead of it in price for too long. That's number one. Number two, this is a great buying opportunity for the number one company in the stock market. NVIDIA is number one, Meta is number two. Okay, so you always want to buy quality, okay? And so you can't go wrong with none of these that I put on the menu today, but you definitely can't go wrong with the number one stock in the world, number one company in the world, and the stock that has made the most millionaires in the world. Okay, when I talk to people like, man, real estate can't do what NVIDIA has done. No other business can do what NVIDIA has done. No other stock has done what NVIDIA has done. So you want to be in best in class, and that's what it's about, especially if you're rocking with me, guys. I'm going to always put you in position to succeed, put you in position to win, but we got to do the work when it matters. This is when it matters. Everybody write this in the chat. When it's blood in the streets, it's time to eat. That means we go shopping. That means we back up the brink truck if we got to. Okay, that means we find some money, we budget, we stop spending on frivolous stuff to make sure we can buy assets that we know have the potential to change our life. Okay, listen, man. All
right, let's close it out here. If you're on X, I can never tell who's actually on X or not. If you can like it or comment or do something, or head over to YouTube, because it's really hard to believe there's 41 people watching right now. But I could be wrong. All right. Let's see what these guys do. They basically manage a bunch of financial advisors. Okay, so they do. They have a technology platform out there. What do they do? SCI do. That's not it. I guess it is actually. No. Everything you just did for SCI ticker. SCI. Okay, let's try that. I got a little turned around there for a second. This is what we're trying to do here. Get rid of this. Get rid of this. Be great to load, but you know, god damn, really, just blowing it here. No, bro, the ticker is SEI, not SEIC. So look up everything for that, please. Okay. Let's see if that can do it for us. Some news would be great as well, but I think we're just going to go with Claude at this point. This is fucking killing me. SEI. God damn. Am I the idiot here? SEI. Like, what am I missing here? Solaris Energy Infrastructure. Solaris Energy Infrastructure, bro. What is going on? Some sort of ticker mismatch or something. Oh, it's because it's on the NYSE, so these guys are getting all confused. It sounds like a solar stock, but I don't even know at this point. Yes, today revenue is up and earnings per share is up. Expect to generate more capacity. They recently had a major AI data partnership. With who? What big companies are they connected to or associated with? Large AI data as much as shit. Similar tickers, I guess. XAI, okay. They're their biggest customer. Wow. Okay. XAI spent 200 million on I don't know how those are exactly connected. Well, so what does the company do? I'm sort of blanking here. Like, are they solar or are they data centers? They rent power plants. Wow. Mobile turbines. That's crazy. Natural gas generators. What is a natural gas turbine? How is that mobile? Doesn't it need to drill into ground? Like, I don't understand what's going on here. Dang. Wow. Okay. This is crazy, but I guess I'm behind the times. There is one stock that is about to skyrocket. The company is SEI, Solaris Energy. And last year, they accounted for 95% of their revenue came from XAI, Elon Musk's LLM company. This year, that is down to about 60%. They're up to 6 customers. I think those 6 are large customers. They don't state exactly who they are. They just had revenue today. Earnings are solid. The reaction was a bit of a drop and then bought up. And the drop is not worrisome because the market sold off so much. So they have mobile gas turbines, mobile natural gas turbines. They connect to natural gas pipelines and allow you to spin up electricity in a way that building a power plant can't do. It takes time to make a power plant, but they apparently can, redirect some natural gas to data centers and allow these LLMs to function. It's a new brave world. The earnings is excellent. It's not financial advice, but let's jump into this.
This is Sam Putnam.
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 All right, so this is the reaction right here. You can see how, yes, it did sell off, but it was bought up toward the end of the day. And it looks pretty strong right now, particularly given SPY selling off, Meta having a terrible time, even some of the good reactions. Amazon is a solid one. Probably the best one still is not a green candle. You know what I mean? So I think you have to just look at these big companies and say, when they're bought up, that's a good sign. When they're not, well, this one's bought up a little, but in general, the big companies sold off a lot. And just now is the market bouncing. We can see that right now, the bounce, but you have to think that a company who had solid earnings and didn't sell off nearly like the other ones. I mean, this is basically like yesterday. Just sort of has gone sideways, even as the market has gone down. So that's the story. Call it relative strength. And as far as what the company does, there's natural gas pipelines, and then a meter is sort of connected, and that gas is redirected to power SCI's mobile turbines, which generate electricity, which then flow into XAI's data centers. So this is pretty incredible. Natural gas seems like the fuel of choice as we transition into the 5 to 10 year nuclear rollouts, and they are literally trucking the turbines around to these hookups. So this is a pretty interesting analogy. This is what they got going on. I don't want to dive too deep into what they're up to, but just wanted to make sure I actually understood even what's going on. Obviously, the use case is clear, and this is basically a gigawatt for XAI per data center. So that's a ton of electricity, and They create that power 24/7. XAI pays them fees. And yeah, this is what's needed to allow, I mean, nobody wants a new power plant in their backyard, right? So this is the transition technology that it makes that allowable. So that's bridging the gap. And yeah, we'll see if they're still the choice 5 years from now, but we don't really need to worry about that. I mean, if you're talking long term, maybe that's a risk, but short term, medium term, it's really not a big risk. The short report doesn't seem to be having, I mean, management background is a speculative impact on the stock, I think. Certainly seems to not have had any large drops. So I'm not even going to look into when that report was, because it doesn't seem to affect the stock if it was recent. So this is going to be other comments from residents. Poor air quality. That's definitely a risk factor for this company. Formaldehyde sounds pretty bad. But we'll see what actually happens at the end of the day. This singular customer risk is notable as well. But if these competitors don't basically take their customers, then so far they seem like they're not in danger of that. Of course, Tesla is connected to XAI, although I don't know how professional that's supposed to be, or how that's sort of described, right? These amounts of money are not large compared to what XAI is up to, but you could see how battery energy storage systems could be pretty useful in smoothing out the power provided to these data centers. And then these are the data center projects. So that's the gigawatt over 7 years. And then here's about a quarter of that. It sounds like already deployed in just a few months. So pretty incredible, fast setup. And I guess this is how XAI was able to catch up so quickly to ChatGPT and OpenAI. Of course, that's a pretty, competitive relationship. And we knew that XAI did it quickly, but this is now explaining what's actually happened. $100 million spent just in Q2. So that's a lot of revenue to SCI. And I don't know if this backlog is going to actually happen, right? Almost 2 gigawatts. Or I guess it's just over 1 gigawatt. I don't know how that makes any sense, given that 1,000 megawatts is a gigawatt, but whatever. It's from Seeking Alpha. We'll give those folks they're a little slow over there. Okay, so anyway, the chart looks great. We definitely understand what they do. GEV just looks like it moves too slowly. So although these other power companies, not recently, but are broadly sort of holding up and basing, you have to look at the faster moving ones. And in particular, one that's holding up on earnings. So that's the idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe, and I will put that on the YouTube posts. Once a month I put it there for subscribers. If you want one-on-one help, head over to stockscommunity.com. You can join the Discord for $25, and I will see you there tomorrow morning.
This is Sam Putnam.
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 This is Sam Putnam.